This segment of Money Matters Boston is brought to you by Ross Mortgage Company.
Welcome back to Money Matters Boston. I am pleased to introduce Sam Wardwell, investment strategist from Pioneer Investments. Thanks for joining us on Money Matters.
Thanks for the opportunity.
Hey Sam, give me a little bit of a background from Pioneer. I understand they have the third oldest mutual fund in America. Value shop, in my opinion, over 80 years in the business. Can you give us a certain, what do you think Pioneer is truly known for?
Well, I guess two things. Number one, 80 years old. We have been 84 years old. We've been around. We've seen a lot of things happen. But more, I'd say philosophically, we have been a value shop forever. We believe that you make money by understanding companies, by buying them for less than they're worth. You buy bonds when the company's going to repay you. And so we are conservative, sometimes sort of boring. We like getting our money back. We like making money on our money.
Well, that's a simple premise, right? Making money when you should and not losing money when you should.
It's pretty simple.
Let's go over the not-so-simple fiscal cliff and what's going on over the next 2 weeks. You and I talked pre-production about what your thoughts are, and I ask you this, where does the market go after it?
I think the market does not know what's going to happen. If you look at how the negotiations are going, frankly, it feels to me a little bit like there's not going to be a decision before year end. That everybody in Congress and the president knows the year end is not really a deadline. They can change the tax law in January or February or March. They can wait till after the inauguration. December 31st is a media deadline, not a real deadline.
Well, that's interesting. I hadn't heard that, Sam. My question to you, if I'm a business person, I've got to plan what to withhold for payroll taxes and what I need to withhold and what I need for benefits. Isn't that kind of screwing up what I'm going to plan to do for business? Doesn't that screw up a business confidence?
Oh, it absolutely does. Businesses are scared to death.
Yeah.
And actually, who knows what the AMT is going to be, because that applies to 2012 taxes. And so when does the IRS start printing its forms? So there are some, shall we say, deadlines, but Congress isn't, I don't think, serious about, and the president's not serious about cutting a deal in the next week. So I think what's going to happen is people are going to watch it, they're going to be nervous, but we won't really get an answer. So we're going to go over the so-called cliff, and then in midair, we're going to figure it out.
He's saying this with a smile. I love it. So maybe optimistic. Because I saw a seminar that you put on called "Climbing the Wall of Worry."
Yeah.
Now I use it all the time in my practice, and I have people looking like straight. What is the wall of worry? Can you explain to our viewers out there when you mention climbing the wall of worry, what that means to them as an investor?
Sure. I'll start off with a Warren Buffett quote. The key to making money, paraphrase, is to be greedy when everybody else is fearful, and fearful when everybody else is greedy. And I like the wall of worry because when a market is in a bear market, it goes down until everybody's finished selling, and everybody's pessimistic, and everybody's worried. And then as people gradually become less worried, as they gradually buy, the market climbs that wall of worry. And when there's no worry left, everybody's bought, and the market can't go up anymore.
It's that Main Street theory, right? But by the time that Main Street jumps in and feels comfortable, is it too late?
The easy money's been made for sure.
Yeah, and you're saying that's the case right now?
I think that if we look at it now, I don't know what's going to happen next week. But if we take a 5 or a 10-year time horizon, stocks look really cheap, and government bonds look really expensive.
I mean, can you imagine lending your government money for 10 years and being paid 1.5%? I can't. But that's a sector of the market that is simply outperforming. I don't get it.
Well, I think it's all fear. I mean, if you look at 20-year Treasury inflation-protected securities, TIPS, they're yielding less than zero. People are locking in losses.
You're paying the government to borrow your money.
Exactly. And essentially, I think the only reason people lock in losses is because they're trying to hedge against the risk of a bigger loss. Safety is incredibly expensive. Fear is the dominant emotion in the market. And that leads us to think, well, there's got to be long-term investment opportunities if you're willing to accept some volatility. Nobody wants to lose 5% in the next 3 months. I understand nobody wants to lose money, but that means that things that might go down are really cheap.
Well, let's look long-term, and I'm putting this in quotes. 3 weeks from now, 2013, what is your feeling, what are the strategists feeling over at Pioneer? Where's a good place to have their money, and where isn't?
I think that the market's going to stay volatile, and it's going to jump around, but if the market goes up through the roof because they eliminate the fiscal cliff, we'd be tempted to take profits. Conversely, if we hit the fiscal cliff, let's assume that we hit the fiscal cliff, relatively speaking, full speed, probably causes a recession, but it cuts the budget deficit in half. And that's very good for the bond market.
Life gives you lemons.
Right. And you sort of go, I'd rather have a short I think, relatively quick recession because the private sector is not leveraged up. The private sector is not overextended. There's not too much inventory. There's not too many new cars. There's not too many new buildings. If we have a recession, it's a brief, short recession, and the economy is growing again by the end of next year with a small budget deficit.
What I'm hearing right now is you're seeing good signs to be optimistic going into 2013, and I think that's important. Thanks for joining us today on the show.
Thanks for the opportunity.
My pleasure.
Thank you.
Sam Wardwell, Pioneer Investments. Stay tuned, there's more Money Matters coming your way in just a minute.